Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey there, traders, checking in on the market, and bulls are getting a bit cocky. So we are seeing significant follow through. The last time we consolidated for a higher low was $299.47. We're up $12 since that has last happened. It's just time to be a little bit cautious. If you start seeing puts coming in, you know that there's people hedging because things are extremely strong and they aren't always going to stay that way. So the RSI on the daily time frame is just now close to breaching 70 for the first time since the entire dump. The 4-hour RSI is just getting over 70 for the first time in the entire dump, and even look back to pre-dump all-time highs. The 4-hour RSI does not stay over 70 long, and you can go back historically. There's some big spikes over it real quick, but again, that to me, all I need to do is look back historically and say, okay, 4-hour RSI over 70 means get cautious as a bull. Doesn't mean this is the top, doesn't mean we're going to dump. It means get ready for some consolidation. Could that consolidation be very healthy and just look for a daily higher low and then see continuation? Sure, that's entirely possible, but just time to be a bit cautious as a bull. We have a very key resistance level approaching. Let's look at it without dividend impacting things. SPX, that level is 31.3672. And here we are hitting 31.30, pretty much 31.31 today. If we clear that level, the next clear price level of resistance is the all-time high. Certainly not suggesting we're going to head to that all-time high, but just highlighting the importance of this, pretty much the last clear hurdle before the all-time high is the next level that we set our sights on. So that level is now in play. Could a rejection from that level result in some daily consolidation? It's possible, and it's worth watching. Also looking at the futures chart, SPX 500 USD, 4-hour time frame. Anything above 30.51 is a 4-hour higher low. We can pull back 2% from where we stand right now and still be in a 4-hour uptrend. So as soon as SPY loses its hourly uptrend, we're going to zoom out and look for a daily higher low to form. And we can also use this futures chart to gauge the 4-hour uptrend as well. And that's something that I took over from the cryptocurrency space after falling in love with the 4-hour time frame to have some middle ground in between the hourly and the daily. IWM, higher high. So resistance break of 144.74. And we know next time we consolidate, anything above 136.41 is just a daily higher low. Next resistance level from here, there's a gap to fill at 140.99. We're well over that. So we're now looking up at 145.98. And we broke that today. So similar to SPY, the first bounce that we saw, and that was 154.20. So that's now the next most important level. QQQ, all-time high 237.47, double top to the penny. Is that meaningful? Yes, but I would have to see a loss of the daily uptrend for me to say, wow, that's a very clear double top. And right now, anything above 223.94 is a daily higher low. Bulls have plenty of space to maintain the daily uptrend. Watch the daily 12-period exponential support. Why? Because it has held 1, 2, 3, 4, 5, 6, 7 times without a close below it. And the first time we close below it, it will make me pay attention to what the bears are showing us. XLV Healthcare. Bull break of the high of yesterday, but no follow through. 103.23 is the high of this move, and we have failed to break that. I would have to see a bear break of 169 for the bears to take short-term momentum in their control. Financial sector was easily the lead bull. If you will notice, we've been covering the laggard sectors. The financial sector was a laggard sector. We were also watching cruises, airliners, gaming, and casino. If you notice, when XLF has a big day, those names have a big day as well. In my opinion, there are absolutely bots and algos that are correlating those laggard sectors all together as a group. So XLF with a very notable bull break to continue the daily uptrend over 24.34. And now we're looking at the next resistance level. There's a gap at 25.03 to be watching. And we know that the next time we top out, anything above 23.17 is a daily high or low. Bulls have lots of space to work with. Significant follow through. Biotech sector. Bulls not really doing much today, closing near the low. Higher lows, 98.87, another one at 100, and another little one at 102.37. We would need to see a break of these little higher lows if we were going to see bears get any momentum. Semiconductor sector, tight range bull break yesterday, beautiful follow through today, gap up, strong close. Next resistance level, all-time high, 152.62. Bulls have lots of space for a daily higher low to form. And the VIX, down to lower lows. Every bounce is a lower high, keeping the bears in complete control. 30.60, lower than 31.60. And next time we bounce, if it's under 30.60, it's just a daily lower high. So, long story short, short term, getting overextended, and we're due for some daily consolidation. But for the most part, our major sectors have plenty of space for a daily higher low to look to form. Just want to check in on our major bulls here. Apple, looking up at all-time highs. Microsoft, looking up at all-time highs. This Microsoft chart's going to be key. Keep an eye on this. High, low, lower high, higher low, and if we fail to break resistance, we could stay in this tightening range for another week or two. How this tightening range breaks will be important because it is one of the major stocks in the tech sector, which of course, tech sector is very important for the market as a whole. On to metals, so went over some in-depth bull flag explanation at the live stream here just now at the end of the day, and we had SPY with a bull flag on the hourly time frame into the end of the day. And now we're looking at gold. Is gold a weekly bull flag? Yes, it is still possible because the bear break on the daily time frame at this point in time does not have notable follow through. That being said, I need to see green days. I need to see at least 1 or 2 green days from here, the next 2 days, if we're going to keep this weekly bull flag alive. If we see another red day tomorrow and a drop, then the odds of the weekly bear flag will decrease. So I took a little loss on GLD today, and I love the trade. Generally, you don't love a trade that you lose on, but I love how I have been trading GLD, as I am not a swing trader, and it's something I'm trying to work on, but I have loved how it's been going since December. So I've made a couple entries and exits. Most recently, my exit was when gold lost support of 1726. I re-entered another position today, trying to bottom fish 1694 and stopping out. And it was a very small loss. So I was going to scale in 2 positions. I scaled in 1. I did not like the way the gold looked compared to the dollar. So I stuck with that half position, got stopped out. So here I am holding 98% of my gains from the previous 2 swings and back to all cash and saying, okay, wasn't successful this time around. What I was looking for was a daily higher low to hold and for the daily trend change to remain a possibility. The fact that we dropped to a lower low has me back to all cash. But again, I will happily continue to potentially re-enter for positions as long as the risk remains small. And I position myself for very little risk because the last thing I want to do is give back my gains from the last 6 months. So the bear break with the lower low, we have to see an hourly trend change. We have to see a 4-hour trend change. If we can change the 4-hour trend bullish from here, it will be notable, but that's going to take a lot of work. What's one big factor for me? The dollar has not started bouncing. It is still very beat up. The 4-hour 12-period exponential resistance is still a very clear guide. So how is gold and silver going to respond having pulled back for 2 days with the dollar not even starting any bounce? What if the dollar bounces for 2 days in a row? Is that going to put further downward pressure on the metals? I would say most likely yes, but that will remain to be seen. It is worth watching the dollar 12-period 4-hour exponential resistance to gauge when the actual daily bounce is taking place. Silver is holding on better than gold. It's a very interesting setup right now where the gold monthly chart is much more bullish than silver. The silver daily chart is much more bullish than gold, and the weekly chart is holding up more bullish than gold. So depending on what time frame you're looking at, we're in very different scenarios. The silver daily time frame is still very strong. Anything above 1685 is a daily high or low with exponential support still holding. That being said, we are forming a bearish reversal candle on the weekly time frame. Still 2 trading days to go. But why is this important? Look at how clear 1895 resistance is. If we top out here, that is a monthly lower high, and we'll then look to pull back. At this point, we're just going to look for a weekly higher low on any pullback. But we have to be cautious and watching to see what do the bears do here, because they're definitely going to do everything they can to defend 1895 resistance and keep that a monthly lower high. And again, you look at the gold monthly time frame, and it's a very different picture. It is way more bullish than silver. And that is because gold is at the highest monthly prices in years, whereas silver is not even at the highest monthly price in 1 year. So very different setups long term. Miners are different setups as well due to their different exposure in silver. The senior miners, like gold, dropped to a lower low at this point with no bear follow through. But again, I would need green days out of the miners for that to be a bear break with no follow through. And there's a number of factors on the miners now. Not only has the dollar not started bouncing, the S&P 500 is at the high of the COVID bounce. What happens if the S&P 500 sees a week or two of consolidation? It's going to put downward pressure on the bull miners. So the bear miners are trying to change their daily trend. Looking at dust because it's leveraged, we did not break to a higher high. 32.78, 32.70. But it's close. The junior miners held daily support. Still very clearly holding 42.92, and we dropped down and we held that support by about 2%. So high, low, lower high, trying for a higher low. The junior miners bulls have to change the hourly trend back in their favor, which means tomorrow they have to break 45.16, which would be an hourly trend change and a daily higher low and a tightening daily range. So it's going to get real interesting for metals and miners and the dollar over the next week. Oil, bearish reversal candle on the daily, 4-hour pullback this morning, bounce on the inventory report, but it's a 4-hour lower high. And if we drop down and break 35.88 support from here, we confirm a 4-hour downtrend, which means zoom out. Daily consolidation will then be underway, but anything above 31.14 will be a daily higher low. Bulls have a lot of space to work with. Natural gas, 4-hour equilibrium broke bullish. Solid follow through to start the day. Big pullback as well. Looking for a 4-hour higher low to form. Again, keep it simple. What is most important to me is the weekly 12-period exponential moving average resistance. If the answer is yes, the bears still have control, and the answer is currently yes. That is where we stand overall. Keeping an eye out for daily consolidation. We have a lot of individual names and sectors with a lot of hype and euphoria, and as long as the market stays strong, that hype and euphoria stays strong. To deflate that hype and euphoria, we're going to have to see some market pullback. I hope you're all well. Do good things, and we'll see you tomorrow. Check out my koozie. Gotta be inventive. I don't have a koozie, I got a sock.